Lucid have finally released a new Flex account. After fumbling over 2 evaluations and constantly getting rage baited by my copy trader last week, we're down to our only 50k funded in our pocket. And since we've already gotten 4 payouts from this account, this week we're gonna focus solely on trading this new and cheaper 50k Flex. But they didn't simply lower the price, as it comes with a trade-off of a 1200 daily loss limit. So is this really a disadvantage, or does it actually help keep traders from overtrading? Let's find out. Newsflash, I only made the decision to get a new evaluation on Tuesday, so we're starting off the second day of the week with some sideways action, and we did have some reaction off the 860 area multiple times. So if price rejects again, we'd be looking for shorts. Right off the open, the market did rip lower as expected, but I wasn't able to find any entry. By the time we got some decent pullbacks, price was already trading at this demand area, which could have rejected at any time. However, my entry came shortly after a decent response of the EMA, with a small target to retest the demand zone to secure a quick 15 points. Even though price started bouncing, there wasn't much follow through. Instead, sellers started stepping in, which gave me more confirmation that we're rejecting off this trend line in the 5-minute chart. So I tried re-entering short, but price was kind of moving fast already, which ended with me chasing near the lows. And yeah, I didn't have to worry about the bad entry, as price literally just ripped lower within a second to bank in my second trade. I could have ended the day here though, seeing we're already up more than 500 bucks. But since the market had only been open for 15 minutes, I decided to save for more, which low-key wasn't really a good idea, as after waiting for more than 30 minutes of non-stop pumping, the 5 minutes started printing lower high off the EMA. And I figured after such a huge pump, we should be overdue for a bigger retracement, right? So I sent a shot again, but we immediately started bouncing off my entry. So I just built for 180 bucks. However, I did try a few more times after the 5-minute printed another bearish candle. But yeah, I low-key got trapped as price was literally just moving sideways without a clear direction. Good thing most of the entries were small though, as we eventually ripped higher, but we did drop our account down to just 200 bucks in profit. Seeing we were reaching lunch hour soon, I didn't really want to overstay to give back everything. But before I closed out the chart, I spotted another chance for a short after the candle closed bearish below the EMA, aiming for price to retest this gap for a quick trade before walking way up a tad bit over 250 bucks after commissions. Pre-market was looking hella bullish, and we do have this huge wick off the 15-minute candle. So I'm leaning long coming into the market, and immediately off the open, I jump in long after the 5-minute candle closed green above the resistance line, thinking with such a bullish market, surely we'll have no problem moving higher, right? But unfortunately, price didn't follow through and stopped me out for 300 bucks. I was still feeling longs at this point though, seeing we did make a huge leg up overnight, so I reaped another long after the 5-minute reactor off the EMA. And yeah, I may have entered a little too early, as price dipped lower to tap me out before eventually moving to our original target. Buyers didn't hold though, as we got another rejection to move lower. And I was like, we just printed a huge red candle off open, and coupled with price making lower highs off the resistance line, sellers should be stepping in this time around. So I flipped short after breaking the lows, but price was kind of hesitating around this area, and I was thinking of re-entering at a higher price. So I built for a small loss before shooting another shot around the 890s. And yeah, once again, we didn't get the momentum we wanted, so I built early for another 150 bucks. However, immediately after exiting, we printed a red candle off the trend line, and I figured this must be it. Sellers are definitely gonna join us to ride the market down, right? So I jumped in short, but was quickly wrong again as the market ripped higher to stop us out for another 300 bucks. Honestly, I was low-key panicking at this point, since we literally got back-to-back losses right after market open, and I really hope I don't crash another account after failing 2 without last week. Shortly after, we did reject off this gap and printed a lower high. So after price broke the trend line, I jumped in short with 1 minute, but was somehow kicked out of the trade before hitting my stop. So I tried again and realized, oh shit, I totally forgot we got a 1200 daily loss limit on this eval, which means I couldn't place any more trade for this account. And if losing 1200 bucks in one day isn't bad enough, I got tilted and switched to my funded account to chase the short, which unfortunately tapped me out for 340 bucks almost immediately. At this point, I totally lost it. I let my emotions take over, since I felt I could have banked in that trade had we not gotten kicked out with the daily stop. And to make things worse, we got the only funded down rate as well. So after we ripped another leg down, I just sent another shot and literally kept moving my stop higher, trying to give it more space. But nope. Eventually, we still got tapped out for a fat 950 bucks loss. And the rest is history, as I took one last trade off the trend line, but since there were only like 200 bucks left on the drawdown, we got kicked off the trade to finally end my payout streak on the the funded account. And yeah, shit happens, and at the end of the day, us traders have to be responsible for our own decisions. And I decided to let my own emotions take over today, which I believe every one of y'all know is probably the worst option, especially on days like this where the market was just barcode trading. And since we can't change how the market moves, we can only survive long enough till our strategy finds its edge again, which is definitely not working out in August for me, seeing we've been banking green streaks for the past month or so. But enough said, let's get back to square one and rebuild our funded account. And we start off Thursday with our only 50k eval down around 1000 bucks. Let's see if we can make it back today, where the pre-market was moving in a range and traded back to the 930s that got rejected multiple times. Not sure if we are gonna dip back into the range, but off the market open, price broke through this trend line that was extended since yesterday. And after bouncing off the demand zone, I took a step long looking for a breakout from the sideways section. Seeing we started stalling around the 930s again, my PTSD from yesterday began acting up. So I just bailed early for 265 bucks. Probably should have held though, as we were literally pumping on non-stop after that. Seeing the 5 minute printed a huge green candle, I decided to re-enter long, but quickly regretted it, as I figured we do have quite a big gap below that price could test before moving higher. So I just tapped out around break even. I'm not sure what the market was on today, but it just kept moving higher with little to no pullbacks. So I just sat on the sidelines, holding myself back from FOMOing into the market, which was low-key the right call, as a few minutes later, we got a decent pullback off the resistance line. And after the 5 minute close with another green candle, I jumped in long again looking for a test of the next liquidity area, and we did bank the trade for a quick 170 bucks. At this point, I was debating if I should stop here, since I don't think we can get a clean entry with the market making new highs the whole day. I did try another long after the 5 minute close above a brief consolidation, but there wasn't much momentum as price started printing doji candles on the 1 minute chart. So I just bailed for a small loss. Shortly after, price did react off this gap, and seeing we're still trading within the trend line, I jumped in long again, but only targeted the next resistance line, which is only around 10 points. So before hitting TP, I did double down to squeeze a little more profits to secure a decent 340 bucks before walking away from the charts up $650 after commissions. After ripping a million points up from yesterday's session, the market's momentum started cooling off, so maybe I'll be cautious going long coming in today. We rejected multiple times around the 260s, so right off open, we sent a short after the 5 minute close below the trend line, targeting the nearest demand zone to secure 217 bucks. And price did bounce off the demand, printing higher highs, so I was like, we did close bullish above the trend line, and maybe it's finally time to continue with the uptrend. So I flipped long, and after the market moved up around 15 points, I did move my stop to break even. I was low-key confident we'll get the hit, but unfortunately, buyers didn't step in, which got us tapped up for 12 bucks. We did try once more after rejecting off the EMA, but it was not looking good as we got tagged out of this trade for 280 bucks, putting the account down into the red. However, I wasn't ready to give up on longs yet, so after another green candle printed off the trend line, I jumped in long again, and this time round, we finally got a decent push to the upside. I didn't want to be greedy since we'd rejected off the 260s multiple times already, so I built early for 160 bucks. Probably should have helped though, as I did re-enter at a higher price after we got this massive 5 minute candle close, and I was pretty much ready for the market to push out of this area, but yeah, it started stalling at the top of the 15 minute ORB instead, so I built once more for 130 bucks, which was low-key a good decision as we started ripping lower right after. I have totally abandoned longs right now, so with the 5 minute bearish close, I sent a short looking for price to break through this demand area, and just when we are literally one tick away from our target, price started bouncing, and since I was afraid we'll pull back into the ORB, I decided to tap out early for 165 bucks. However, we were able to close with yet another red candle on the 5 minutes, so I just sent one last shot aiming for my original target to bank in a quick 10 points, before ending the day locking in 420 bucks, which somehow brought this eval up $77 even after the massacre on Wednesday. And truth be told, the new daily loss limit does help keep me from crashing out. And since we've unfortunately blown our funded account, I guess we are back to the drawing board trying to pass this new evaluation, hoping we can one day trade up to 5 accounts and eventually move to live. Or maybe we can start exploring other prop firms too, who knows. And if you guys have any recommendations, feel free to drop a comment down below, and I'll catch you guys in the next one.